Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Monday edition, August the 8th, 2022. We still have rising food prices, we still have food prices that are moderately high, gas prices that are high, and we also have this inflation that's continuing to grow at a pace that's uncomfortable for a majority of Americans. CNBC reported today that food prices fell sharply in July, but the respite may not last. As you know, and I've been saying since last video, that the fall time and the winter time, we're looking for prices to go up on wheat, corn, soybeans, milk, eggs, meat. All of those prices are going to continue to go up despite dropping 8.6% in July because of lower wheat and vegetable oil prices. All of these will be going up. And things are going to be really concerning here as inflation continues to tick toward 10%. Now, I know President Biden has passed the Inflation Reduction Bill. That will not help the average American. That's just a tax to try to raise more money for the government on the corporations. That's not going to help the food bill, your utility bills, or your light bill. So the index in July was still 13.1% higher than the previous year in July 2021. So prices on these commodities will continue to soar as inflation continues to get out of control. So wheat, soybeans, sugar, corn, like I said, meat, all of that, eggs is going to be going up in this fall as kids head back to school in September. Some of them are already going back in the next 2 weeks. Look out for school lunches. Everything is going to be going up by October, just before the midterms. And the thing is that gas may stay around a few cents cheaper until after the midterms or just before the midterms to make things look good. But we all know that's not going to be sticking. That's not going to stick long here because the media is reporting that prices are going to continue to rise. And we know that the Ukraine-Russia conflict is not going to be over by the end of this year. It's going to last into next year, and so that means more supply chain disruptions, and the damage is already done. Remember, we're eating last year's crops. We're not eating this year's crops. We're eating last year's crops in terms of food supply, and a lot of our food supply we get imported. Over 70% is imported from other countries, whether that be Mexico, Brazil, Honduras, Ethiopia, you name it, coffee beans. Everything is being imported. Very few is made over here. And farmers are realizing they can make more money selling soybeans and corn to China, who has a lot of population, a growing middle class, than they can right here at the homeland. And so this is on top of people struggling with savings, and not only here, but in the UK, United Kingdom, and in England, and in Europe, and other countries in Germany, France. We're hearing the same thing, that cash withdrawals are on the rise, according to CNBC, as Brits grapple with the rising cost of living. Welcome to the club. All Western nations are grappling with the rising cost of living here, the inflation that continues to eat away at savings, continues to eat away at our budgets. And so now inflation is in UK, it's going to peak over 13% in October. We're going to be not too far behind. Like I said, we're going to be over 10% by September, end of September. And this is not going to get any better here. And so many people are doing staycations and budgeting, even in the U.S. and the U.K. Let me know what you're seeing in your neighborhood. I'm seeing commercial real estate closing down in the Northeast, in the Southeast, in the Midwest. Vacant buildings. I'm seeing, despite seeing now hiring signs of $15 an hour, $16 an hour in a lot of these places, they're just building a database of applications. I don't see a lot of steady hiring going on, a lot of projects for the young people to get into work or school in. And so where is the money flowing to? Well, they're saying a lot of people, the media is saying a lot of people doing staycations, but recently, I don't know if you've seen that the news reported that the airlines were having a bunch of delays and cancellations because they couldn't find pilots. Remember that 2-3 weeks ago? They were saying that there was a pilot shortage and they couldn't find workers. And so I don't know how that's working out. But now they're saying that people are budgeting in both the UK and in the United States. And let me know what you're doing. Are you cutting out on eating out less? I know I've cut down unless I'm on the road. I only eat out now once a week, whereas before it might have been up to 3 times a week. And I just find the quality of food not to be good. And we've gotten rid of the dollar menu at some of these fast food places, and even the more mid-grade places. The food quality is smaller, the portions are smaller, and they want the same price or higher. And so let me know what you're seeing in that aspect too as well, because commercial real estate continues to go down, housing continues to go down, and food and utilities and transportation costs continue to go up. And the stakes couldn't be higher for investors as hotter inflation would place the Federal Reserve in uncharted territory. They're going to be there in uncharted territory because now, Federal Reserve Chairman Powell is going to be a situation where he's going to be raising rates into a slowing economy and not raising them fast enough. He should be raising them 1 full percentage point, as we still have about 3 rate hikes left for this year. We haven't even gotten into the first year of rate hikes. This is just the first couple of months of rate hikes. And each time they're saying 75 basis points, which is like fighting a throwing a bucket to try to fight a bucket of water to try to fight a forest fire of inflation here. True inflation is at 20% right now, guys. Their numbers are saying 9.7%, 9.8%, heading toward 10%. We're almost double that right now, and the stakes are higher. So this means that he's faced with a choice, and I think it's not going to be an either or choice. We're going to either destroy the Wall Street economy. Is going to take a big time depression and Main Street, and I think that's what's we're going to now. This is the time where Wall Street and Main Street is going to be affected by this inflation, and that means the depression is coming. And so right now they didn't want to call it a recession. Maybe when next year, summertime, they'll finally say it's a recession. By then it'll be more like a depression, because everybody will realize that not only is the inflation not transitory, but the economy, the job creation, the layoffs that are coming from these corporate companies and these private and government companies, they're going to be cutting up contractors. They're going to be cutting down on all this extra spending, because the tax revenues are going to be falling. And the national debt, what about the national debt, guys? The national debt is still at $30 trillion and growing. And so it is calculated. This is planned. That someone has a plan. This is intentional. This is not just happening to crash this economy, not just the U.S. economy, but the UK, the G8, the G20 nations, the world economy, because everybody's fighting inflation around the world. It's just that we are at the forefront because our economy is one of the world's largest economies, if not the largest, at $16 trillion. Supposedly, floating around, whether on digits on the screen or actually in a vault somewhere. But guys, and the other thing is too, where is the gold? We keep saying we have all this gold. Where is the gold for the United States? Do you believe that we have gold here in the United States at Fort Knox? Is it empty? Where is the reserve? So let me know your thoughts and comments on all this, guys. Be blessed as we start the week. God bless. I'll talk to you very soon later.